Welcome to the Blockcrunch podcast, the go-to podcast for investors and builders in crypto. And before we get started, just a reminder for you guys out there, the Blockcrunch podcast is intended for informational purposes only. Neither the host nor its guests are licensed financial advisors, and nothing discussed should be construed as financial advice. Views held by Blockcrunch's guests are their own, and sponsorship messages do not constitute financial advice or endorsement. With that out of the way, let's jump right in. Now, before we get started with today's episode, I've got some great news for you. Now, a lot of you have been asking for how I analyze projects that I bring on the show. That's why I decided to create Blockcrunch VIP to share with you all the heavy research that goes on behind the scenes. Now, every week or so, our team prepares an in-depth research memo with things like sector analysis, technical concepts made simple, in-depth competitor breakdown, and even interactive models, so you can learn about the most important projects before they become important. And our team is putting in hours every week scouring Discord, Twitter, forums, and blogs to help you get an edge in crypto and understand the latest projects and themes at the deepest levels that goes way beyond just an interview. Now, in addition, we'll also host exclusive AMAs with myself to answer any of your questions. So all of these are only available to Blockcrunch VIP subscribers. And the good news is that while our interviews will always be free, the VIP tier costs less than one coffee a day. So head on over to theblockcrunch.com/VIP or click the link in the show notes below to sign up. All right, hey everybody, welcome back to another episode of the Blockcrunch podcast. Now, this is an episode that I've been wanting to do for a very, very long time, which is an in-depth look at DAOs, the DAO thesis, what's wrong with DAOs today, and how can we grow this DAO universe. And with me are two of DAO's biggest proponents, Peter and Dmitry from 1KX. Dmitry, you've been on the show before, but Peter, this is your Blockcrunch virginity. So welcome to the show, both of you.
I am proud to have lost my Blockcrunch virginity here. I'm excited.
Yeah, super stoked to have both of you on. So now you guys both are part of this fund called 1KX, which our listeners are familiar with, and you guys put out this really great blog post recently about this future of DAOs. So before we dive into that, can you just give us a little definition of just what DAOs are? Because people out there that seem to think that anything with a Discord and with a Twitter is a DAO. So is that the right definition?
Yeah, so I think first of all, we're still really understanding, what could DAOs be? But I think on a property level, yeah, the organizations that are crypto native, they're digital first, and the organizations that have distributed ownership and governance structures. So unlike traditional equity companies in which there's sort of total board controlled or CEO controlled sort of organizations, ownership, governance of assets, rights, or properties of the organization is completely, I guess, distributed in governance by the community members that are part of these organizations, and hence decentralized autonomous organizations. I think a lot of people mistake autonomous for being automated software, but in my definition, the autonomy of a lot of these digital native organizations comes from the fact that the management of these organizations are permissionless by token holders or the owners of that distributed organization, right? And I think there's a lot of exciting things, but I think the most exciting thing about DAOs is the fact that they're very easy to start. Arguably much harder to run, but you can start them in a couple minutes with a Gnosis safe and set up a snapshot dashboard just as quickly. And you're off to the races, coordinating in Discord or Telegram or whatever communication tool you want. And I think the cool thing about this is that, you just have a lot more experimentation. You have a lot, a more open source innovation happening just because of how easy it is. And if you have a lot more experiments happening, you'll find a lot more things that are working. And I think this is where things get really cool, is that you get to, have, different permutations and different attempts at building different, at building products, at building services, at making investments, and different people are able to try different things in ways that we would never completely sort of expect with a rigid legacy structure that's purely paper based, right? Instead, it's all software based, it's all programmatic, it's completely flexible, and that's sort of, I think, why people are excited about DAOs.
And then I'll offer two more definitions. I think, you ask 10 people what the definition is, you get 10 different answers. Two more perspectives. One is it's a group of individuals who are loosely organizationally coordinated and strongly economically coordinated towards a common goal. So really groups of people with a shared mission and a shared bank account. And I would actually argue 10 people with a Gnosis safe using Discord emoji voting is a DAO. Another more traditional definition is actually if you just look at what a cooperative is. You Google it, it tells you they're member owned, member governed businesses that operate for the benefit of their members. And I think from another light, DAOs are effectively these digital cooperatives.
And do DAOs need a token to be a DAO? Like, if I'm just a community, like what differentiates a digital community from a decentralized autonomous organization?
I would say, at least from my perspective, I think DAOs can totally exist without a token itself. I think people can definitely coordinate around shared objectives and I guess cooperate and collaborate without economic alignment. But I think the token is what establishes the economic alignment and establishes, I guess, a social contract that everyone is working together in a positive sum way towards that shared goal.
That makes
Yeah,
sense.
and
And I think, yeah, go ahead. Sorry.
oh, sorry. Just wanted to add, like, it need not be a fungible token. We've seen
Mhm.
DAOs operate with NFTs. As I think Nouns
Mm,
is a good example of a DAO that operates via one NFT, one vote.
that's a really fantastic point. Yeah, Peter.
Arguably, it doesn't even need to be a transferable token at all. It could be completely reputational based, right? So, arguably, DAOs have existed for many years or hundreds of years before even crypto with like religions, right? Where it's just purely social contracts and purely social reputation. A bunch of, I guess, priests and churches scribbling down who's good and who's bad and who can be trusted, right? So, yeah, there's a
Yeah,
lot to explore there.
I guess it's really just a digital way for people to collectively coordinate, but this time we can actually do it decentrally. Like for versus say like churches before, where you need like local kind of parishes, local communities. You can just do it completely online right now, and the tokens are just one of the many tools to introduce economic alignment, which Dmitry mentioned. And I think it's really refreshing that you guys are bullish DAOs because in this market environment, every influencer out there is bearish DAOs, and I think for good reason as well, because there's been so many stories of just like free riders and things getting too bureaucratic at a DAO level. So before I get into kind of specific examples that we've seen in the recent kind of months, what are your general thoughts about that? Like, are DAOs just fundamentally harder to manage than an actual company? And are there like specific use cases that can only be done with a DAO and not with a startup company?
Yeah, it's fascinating, right? I sort of a lot of the sentiment towards DAOs sort of echo the sentiment towards tokens back in the last cycle in 2017, 2018. After the last crash, right? Massive bearish sentiment towards tokens. No one believed in tokens as a means of value accrual. Everyone believed in equity companies. I think in a similar way, the idea of DAOs is quite a valid one. I think the excitement is valid. However, the implementation of the current DAOs have been not great, to say the least. Right? I think one core issue is, I guess, one you can sort of think of DAOs as digital organizations, but another way is to think about DAOs as games that where the objective instead of like the objectives being purely digital and purely virtual, they're around business objectives. They're around creating things. They're around investing. They're around building services. And I think the main difficulty with DAOs is the fact that most of the DAOs are trying to build organizations or build digital organizations around objectives that they are not yet clear on. In TLDR, it's like they're trying to build game loops over things that are very, very difficult and unable to build game loops for. I think a lot of the DAOs that we've seen fail or struggle really are built around really, really difficult processes and objectives such as product development. Whereas we've seen many DAOs with simpler, game loops such as service DAOs or investment DAOs or even NFT collection DAOs operate pretty effectively, right? And I think that I think we're in a process of discovering how to build more, I guess, game loops for more and more sophisticated and more complex, activities. I mean, like product development is the hardest game loop, arguably. product development in a centralized team by itself is extremely difficult by nature. And if you throw that into a decentralized environment where everyone has power, yes, you're going to end up with a mess, right? To say, and I think it's so like zooming out. I think that idea of aligning groups of people permissionlessly through tokens is still a highly powerful idea. I think we've just yet to figure out how to actually execute on these ideas. And maybe Dmitry has a few thoughts here.
Well, I could offer the bullish bear perspective, in the sense that most are probably broken, especially when we're looking at protocol DAOs. But I would frame it as a thing we need to figure out, regardless of whether we want to or not. It's almost like the Web3 vision of having these open source protocols and public goods that span across generations. You effectively need to solve the human coordination layer and establish the right ownership and coordination structures that allow individuals from around the world to continue stewarding the software. This is very specific to protocol DAOs, and I think, like Peter was mentioning, like the different flavors. But I think if you believe in the Web3 vision, you need to solve for the human coordination layer.
Mm. And I think it's really important that you guys brought up these different types of DAOs. Like there's product focused DAOs, like basically like Maker DAO. The entire DAO is surrounding one single product and the development of that product. And then there's more, I guess, objective oriented DAOs or more generalist DAOs. For instance, like these VC DAOs, like Meta Cartel, which Peter, you're very intimately familiar with. Which for our listeners, it's basically a venture DAO. It's a group of people investing money into startups. So but then, regardless of what type of DAO it is, I personally am a hardline progressive decentralization believer, which is this belief that we should always start with a centralized entity and have just a bunch of people extremely motivated to solve a problem, and then over time decentralize and include more people in. And I've never seen the opposite work. Like I've never seen something that starts completely decentrally work, except for Bitcoin and Ethereum. So I'm curious what you guys think there. Is progressive decentralization the only way to do this properly, or have you guys like seen counter examples of that?
I think from my perspective, you probably need to have it be progressive. I think it helps. I think the initial 10, 20 members of your DAO will dictate the culture of the next 100 to 200 members of your DAO. And I think you actually need to be very thoughtful with how you scale the initial group of people and how you expand that. So first, you need to be able to onboard really passionate, find 10 really passionate contributors, ship product or achieve some shared goal with those 10 people. And then you could expand to 20, 40, 80, etc. And I think a lot of DAOs grew too quickly and they have, 100 plus contributors and no one really knows what they're doing. No one really has like clear responsibility over specific areas. And I think before you scale, you need to get the right people to join and then figure out structure and then figure out ownership.
On top of to that point, most of these DAOs are onboarding hundreds of people or into paid positions without actually understanding what the game looks like, what the game plan is, what the sustainable participation revenue loops look like, right? And when you do that, all you do is just burn money, right? I think there's sort of like two things to balance. So I think that like I am generally in the camp of like progressive decentralization, but I'll argue the other side, right? Just as a thought experiment too. I think that it's a balance rather than a pure one-sided progressive decentralization, and the different modes of operating that you should be careful. You can decide to opt for as well, in the sense that when you're launching a DAO, there's two things to get right. I think first you need to understand what is, I guess, like a core business loop that is sustainable, and at the same time you need to attract contributors that can contribute to these business loops, right, or revenue loops. And I think like it's a balance between figuring out the loops by themselves as well as bring a community of people alongside the journey with you, so that they're aligned, they're involved, they feel like they're part of a movement that's bigger than what they are. And I think it's hard to achieve that if you just figure out the business loops and start day one with absolutely nothing, nothing started, right, from scratch effectively. And I think yeah, it's I think a different case might be the fact that, like, if everyone, if you threw in 100 people, into a group in which everyone really understood the core business loops very well, could they, participate, and could they become a meaningfully decentralized DAO while still being effective from day one? And I think maybe yes, right? So I think, like, there are different ways to start DAOs. I think the progressive decentralization route, definitely is a lot simpler. It's a lot more iterative. It's something that we understand as an operating model for Web 2. But I also suspect that are, different ways to launch these organizations. Maybe start at scale, but I would admit that we haven't yet figured out effective operating processes that allow us to achieve meaningful results at scale yet, right? So I think that's like a TBD, like that's a design space, a coordination design space that we haven't yet figured out. I wouldn't just discard it as something that doesn't necessarily work, but yes, to the data, I totally agree. Like, nothing has really worked from
Mm.
a decentralization first perspective. But that's it's just a different perspective, I guess.
And are there like good examples of progressive decentralization done well in your opinion, like projects that maybe people can look to as a template for how to do this properly?
Yeah, I think one of the DAOs that really surprised me was Code Arena. Code Arena is a DAO that basically coordinates auditors and software engineers to look for bugs and to audit code, right? Traditionally, smart contract audits have been conducted by a handful of auditing shops, right? Instead, what they've done is that they've created, a service DAO that coordinates auditors to run audit contests. They basically commit their bugs that they find, and they're rewarded once they're reviewed. And the fascinating thing about why Code Arena is working is that the game loop of I guess smart contract auditing is actually fairly straightforward. I think in comparison to much more complex, I guess game loops or revenue loops such as product development, where you're trying to build a new product, discover a market, and find revenue, right, and monetize it. Auditing is actually much more straightforward, and as such, I've been able to really, I guess, identify what it takes to automate the process of code contests, code auditing contests, and scale that. And they're at a stage in which they're beginning to automate a lot of the manual processes that they've like initially facilitated, and they're starting to really step back while also seeing the machine run fairly efficiently. So they were able to really do roughly initially like one audit contest a month. They're roughly doing handful of like maybe one audit contest a week right now. They want to scale to a point where they can do 10, 20 per week, right? And they're able to really do that in a fairly straightforward way without actually increasing fixed costs that a traditional services business would have, right? And I think this just like it's an interesting data point because yeah, it sort of enlightened me to this idea that like how well your DAO can operate is wholly depend, or at least how hard it is to build a DAO is wholly dependent on how complex your participation loops look like, and whether you can really automate the incentives, automate the processes involved, and then be able to scale that way, right? But I think that's one example. Maybe Dmitry can talk about a few others. Yeah.
Well, it's a good example, and also with the with Code Arena, the wardens, at least the initial wardens, have a sense of ownership. They do receive a token allocation. It really helps the retention rate of the highest quality auditors. And if you look at the Discord, it's actually not very buzzy. It's not like a lot of these DAOs that have thousands of people in their Discord. It's actually fairly
When
quiet.
token.
Yeah, yeah, and like people are doing work and they have a very clear understanding of the job to be done and then how to coordinate around that. So I don't think a successful DAO necessarily means that your Discord is always buzzy. I think it's actually more so like, how can you clearly define the rules of engagement, and like the economic loops, and then have people coordinate around those loops in somewhat of a decentralized way.
And for these like successful examples of DAOs out there who manage to pull off this progressive decentralization, what are the things that they decentralize first? Like, what are the things that for the projects out there who are trying to do the same? What are some of the things that they should delegate to the community to vote on first? And then what are some of the things they should probably keep it as centralized as possible until the final part of their decentralization?
Conceptually, I would start with most simple things first, like the lowest risk, because I do think it's a bit of a learning process with the community members. And I think, if you're building a play to earn game, what you probably don't want to do is hand off economic modeling, to the community. It's a very difficult thing. There aren't many subject matter experts. And actually, I think that's why a lot of the early experiments around base layer governance, and like DAO structures around base layer governance hasn't played out like a lot of people thought it would, because there's so few people that understand things at that technical of a level. So I think things around base protocol changes, like product development, are probably things that could come at a later stage. And I think you almost need to teach your community how you want them to engage with the core team, and then participate with the core team in the beginning.
To that point, we've actually been doing some work with Sky Mavis on scaling the governance recently, where the vision all along for Sky Mavis was really to have decentralized governance of the Axie game and economy, right? But however, and as much as people are screaming for governance, if you just transferred governance to AXS holders from day one, or at least right now, it'd be complete chaos. It would just probably be people proposing to give themselves a lot more SLP than they have right now already, right? Or some other sort of self-interested, proposals without a lot of signal. The team has recognized this, and that's why they're taking a different approach. And I guess the approach that we sort of like came together on, right, to sort of and landed on was this idea of, I guess, credential-based governance, where you actually want to have subject domain experts identified through verifiable credentials. Whether identified manually or programmatically, you want to identify the people who can, actually participate effectively in governance, who have the subject matter expertise, right, to have informed decisions. And then you want to organize those people together as under political parties, almost as groups that can basically form informed opinions and form signal around them, while also giving them highlighted governance bonuses in the areas that they are experts in, right? So I think maybe 1 or 2 years out, the vision is like people who've gone through the Axie School of Economics have a 20% governance bonus in all economic related matters, right? People who, and you can sort of scale this with, like, in traditional world governments, you have the Ministry of Defense, you have Ministry of Health, you have Ministry of Education, blah blah blah. I suspect we're going to see the same with Axie, but that governance, I guess, like that governance coordination doesn't sort of necessarily emerge so organically. You need to do the groundwork to actually form these groups. You need to do the groundwork to identify the right people and then highlight them and give them a lot more leverage than everyone else. And I think this is probably sort of a hint of where governance is going. Credential-based governance is going to, and reputation-based governance is going to only become a lot more important, at least in DAOs, in which you really need to effectively govern at large scales.
Hey guys, I'm really excited to tell you more about one of my favorite products in crypto right now, DYDX. This is a team I've known since 2018, and they've built one of the best exchange venues out there that also happens to be decentralized and mobile friendly. Now listen until the end, because there's an opportunity for savvy traders out there as well. And here are just a few reasons why I like DYDX over other exchanges. First, it's very liquid. It processes $2 to $3 billion every day in volume and has 35 perpetual swaps as of this recording, which means you can trade things like Ethereum, Bitcoin, Doge, Solana, and most of the most popular assets with up to 20x leverage in the venue today. Now, second, it's also extremely cheap. And if you're down bad from the bear market, you don't have to worry about gas fees at all because there is no gas fee on Starkware Layer 2 where DYDX is built on. Now, that brings me to my next point as well. It's incredibly fast. Unlike other Layer 2 and high-speed DEXs, you don't actually have to wait to withdraw your assets anymore. And as an additional point, by using Starkware, DYDX also provides user with increased security and privacy. And my personal favorite feature is the cross-margin feature, which means I can seed one account with USDC and trade across multiple markets from there without needing to start sub-accounts because I really hate managing so many different sub-accounts. And their iOS mobile app is also live right now, and it's amazing because it's compatible with MetaMask, Coinbase Wallet, Coin98, Huobi Wallet, and a lot of the most popular mobile wallets out there. And it's available for people outside of the US or sanctioned countries today. And one last thing, one exciting opportunity is their competitions. The most recent tier in the $10,000 equity tier have won over $95,000 in rewards. And you can get started with as low as $500 in equity to compete for prizes. So if you're already trading, might as well get paid to do it. So if any of that sounds interesting to you, I highly recommend that you head on over to dydx.exchange to learn more. And I thank them for sponsoring this episode. Yeah, I think that's so interesting because I actually just recently read about this as well. Your work at 1KX with Meta Portal DAO, basically helping Axie Infinity trying to credential at least 1,000 contributors and set up formal processes. And this ties in pretty well with a recent episode we did with Project Galaxy, which is a credentialing project. And for our VIP subscribers, we did write a 10-page report on just how it works. And I do think that is probably going to be how large DAOs have to govern themselves over time. But at the same time, I think Axie is also an exception because at least my impression is that most of the DAO use cases are often very short-lived and very ad hoc. So we have things like Constitution DAO. Basically, a bunch of people decided, hey, we're going to raise some money and try to buy the Constitution, like Nick Cage in National Treasure. And then there's City DAO, where they just kind of bought 40 acres of land in Wyoming. And then there was People Pleaser DAO, where a bunch of whales just pulled together capital to buy some art. So all of these actually strikes me as more, less companies, more like SPVs with a very finite duration in terms of the lifespan. I'm curious about where you guys think most DAOs will head towards. Is this more going to be like these ad hoc, organic, maybe short-lived type of entities, or is it, all corporations just going to become DAOs?
I think it's an and. I think we've been talking about different flavors, and I think that distinction is important around protocol DAOs, service DAOs, collector DAOs. I think in a few years, quantity wise, we're probably going to see many more of these collector DAOs, like the pleaser type flavor. I think the members in these DAOs is going to be much smaller in like the single to low double digit. And likely the dollar amount that they'll be managing is also going to be much smaller than what's in a protocol DAO treasury. I think the collector DAO and investment DAO use cases and like flavors and to some extent service DAOs play better with more of like a retail type use case. And I think like as the concept and crypto as like a tech in general reaches more mainstream, I think that's going to be a fairly popular flavor of multiplayer coordination.
Yeah, and Peter, anything to add there as well?
I think Dmitry hit the nail on the head.
Awesome. Yeah, I totally agree with that. I do think it makes sense that there will be more collector DAOs than the project DAOs. And I'm really excited to see kind of where they're evolving to. But I think we've kind of shielded DAOs enough. So I want to focus a little bit on the maybe more negative stuff, which is people's gripes towards DAOs. So I think one notable example is the Uniswap DAO. So they established this DeFi education fund, I think back in June 2021. They received like 30 to 45 million in Uni tokens. And then most of the votes for those tokens were voted in by institutional holders, and there's a proposal to pass through despite major community pushback. And then, as expected, they dumped all their tokens because of market conditions, and not much news and progress since that. So this seems like a lot of this like bureaucracy and fake governance is still happening, especially for very large DAOs. What do you guys think about that? And is this something that we can resolve over time?
Arguably, the Uniswap example actually I feel like highlights a benefit of distributed decentralized governance. I feel like the fact that that proposal was allowed to pass while the community itself was pushing against it showed rationality on the community's part. For the maybe as exception more than the rule in this space. For once, the crowd showed some level of wisdom, and it was actually sort of, I guess, like the larger whales who had sort of who were investors before, right? And I think this points towards the fact that it just shows the degree of decentralization for that very DAO, maybe, right? But I think generally speaking, yeah, like DAOs have tons of issues today, right? So I think, like Dmitry said early in the podcast, right? Your DAO, the first 10 contributors are going to see the culture of your DAO, and the next 100 will drive that momentum forward, and so on. And I think I think that's been a structural issue of a lot of retroactive airdrops that have been used to kickstart DAOs. They're done at scale so that culture is completely out of the control of a community or even the team. It's just these communities are let loose, and I think that's just like led to a lot of coordination failure on that front. People don't have the time to form relationships, to form and build these coordination structures to effectively work with each other. And you just end up with this very antagonistic, very zero-sum environment where people are just trying to extract value from one another without actually caring about the shared objective here. And I think Uniswap definitely highlights that. But it would also add that, I've talked to the Uniswap team and other supporters, and a lot of the inactivity is by design. And I guess it's always in hindsight, right? So I think a lot of DAOs have just meaninglessly like spent money, hide people. I think we're yet to see the effects of that inactivity or lack of activity, or the high barrier to any activity for that DAO, right? Yeah.
Yeah, I think you could frame it as like governance extractable value. This could be proposals from a core team to like raise their own salaries when there's like no like actual revenue being produced by the DAO itself. You almost act as like a union, like a worker union, that might that could be threatening to leave if like the treasury doesn't allocate more funds to keeping you on. I think that's an issue that needs to be solved. I do think NFT based voting, reputation based voting could address a lot of the issues with just pure token based voting. And yeah, I think Peter mentioned a lot of the points on contribution. I think you don't need to scale contribution for contribution's sake. I think it's more so activation that's important around how do you find who your highest quality contributors are, because they're out there. But they might not be fully engaged. And it's like, how do you activate all the latent talent that's in there in the specific cases where you need them? So I think it's like more selective, like high performance contribution, and it's really knowing who do you want to give a voice to in which situations, and then how loud of a voice do you want to give them? And I think like that nuance. Again, we're still trying to figure out how that works in the flavor of protocol DAOs, especially with a large number of token holders.
Yeah, and I think that nuance is probably one of the most important points because on one hand, I think Peter's point is definitely right in the sense that the Uniswap examples illustrates why we should have more transparent and more decentralized governance, so that not a few whales don't control decisions. But at the same time, there's this humorous quote that I'm paraphrasing, but it's basically to the meaning of democracy is government for the people by the people, but the people are dumb. And we kind of saw this example with a recent DAO dispute between Merit Circle and YGG, where the team was actually somewhat against this, but the members of the Merit Circle DAO voted to terminate the relationship with YGG, who is an investor in that DAO, basically scrapping their legal contract, which is actually illegal, and citing conflict of interest amongst other reasons. And a lot of people were like for this in the community, but it was clearly not something, at least in my opinion, not something that's correct just because it's illegal to kind of breach a contract. So in those situations, how do you balance like giving the community a voice, but also when you run into situations like this with things that are maybe kind of illegal, maybe controversial, how do you resolve things like that?
It's a good question. I guess the root of the problem there is more about the quality of your participants, the quality of your token holders, right? I think people really understand how important this is. It's not just about, yeah, we got like 20,000, token holders, but if they're all idiots, then you're kind of fucked, like it goes to the point of curating your core community, right? And a structural issue of liquid ERC20s, right? And I guess, how do you prevent it? I honestly don't have a good answer for this. I think most teams would probably claim decentralization, or I guess argue some level of like regulatory arbitrage to say like, hey, we have nothing to do with this. We couldn't have stopped it, right? And I guess that is also the dangerous part about decentralized organizations. If they are truly decentralized, no single party can pull the plug on something dangerous, reckless, and or evil or whatever, right? So I guess it's more points towards like, yes, we can expect a lot to go wrong, and more the point where we should be careful about building decentralized organizations that can't be stopped.
Yeah, and I think there's a lot of experimentation you could do here to say it could potentially be mitigated over time. So one example or one experiment I like to see is more of this kind of like retroactive reputation-based governance power, where say a DAO proposes a vote. With that vote is a very clear KPI attached at a specific point in time, and then at that point in time, you evaluate, was this a good idea, or like did we hit the goal that we wanted, and maybe that's TVL volumes, some quantifiable metric. And if you do, then the people who voted yes on that proposal get like a boosted governance power. They get more weight, and over time, you could start to effectively curate the best decision makers in your DAO, and that's kind of done by pseudo reputation, and it's retroactive, so it'll take a few cycles to bake that in. But I think that's one experiment that I love to see.
Yeah, and I think that fits into the discussion that we had just now about credential as well. I do think that's one key missing part of DAO governance. But anyway, I think this has been an incredibly interesting conversation. There's so many more tangents we can take this on. But as we wrap up, I'd love to get your thoughts on just what is one DAO that's like interesting to you, or you're most excited for, or maybe just top of mind for both of you, so that our listeners can go check it out. Dimitri, would you like to go first?
Yeah, I think I mentioned it. I really like nouns. Very clear goal. It's to propagate the nouns IP. It has a sustainable funding structure. One noun per day gets auctioned off. It's a very natural, progressive decentralization just by nature of that supply ticking higher. And you don't need an ERC20 to govern it. And the community there has come up with some very interesting innovations around effectively like the coordination governance space.
My favorite one right now is Camp. they're basically a DAO that brings people together to produce music, and they're behind the latest headless band known as Headless Chaos, and they brought together 70 creatives, artists, musicians, producers, visual artists to produce a whole album. Where the royalties and the music revenue of the NFT mints that are selling, go directly real time to the participants. And I'm just like fascinated by multiplayer cooperative sort of like collaboration, I guess. And they're sort of really pushing the forefront of what's possible.
Yeah, most definitely. And thank you so much for those recommendations. And once again, thank you so much for coming on to the show. Really, really enjoyed this conversation. For people who want to follow both of you, what are the best channels for them to maybe reach out or learn more about your thoughts on DAOs?
Yeah, thanks for having us. D Berenson on Twitter for me. DBERENZON.
I am Peter with a 3 in the middle on Twitter, and easily reachable there.
Awesome. I will include those in the show notes below. And thank you so much for coming on again, guys.
Yeah, likewise.
Thanks, Jason.
Thanks for having me.
All right, that's it for this week's episode of the Blockcrunch podcast. So thank you so much for tuning in. If you enjoyed this episode, please make sure to subscribe on your favorite apps. And in case you didn't know, this interview is also available as a video on YouTube. And if you tag the Blockcrunch on Twitter this week and tell us what you liked about this episode, I'll be sure to respond to you as well. Now, if you'd like to go even deeper, we have a VIP tier where every week or so, we write an in-depth research brief or investment memo on a project. And we'll have exclusive AMAs with myself where I answer all your questions as well. Now, we already have analysts from some of the top funds and companies in crypto as subscribers. So if you're serious about getting an edge in crypto, head on over to theblockcrunch.com/VIP to learn more. And once again, thanks for supporting the show, and I'll see you next week.